Ba-doom, 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 ba-doom. Kenny baby just slips and fails under the tree for me. Been a shitty trader, Kenny baby, so hurry to your jail cell tonight. Kenny baby, some 5-10 calls because I am a degen.
That means degenerate.
I just can't simply stop. Kenny baby, so hurry to your jail cell tonight. 5-10 calls all our way. Think of all the cash I've missed. Think of all the morons that I got to enlist. Next year I can say I'll do the same, unless you squeeze my favorite play.
It's GameStop.
Kenny baby, I want a lot, and really it is a lot. Been a degen all year, Kenny baby, so hurry to your jail cell tonight. Kenny honey, some really big things I need. My shares and my fucking money. Kenny baby, so hurry to your jail cell tonight.
That'd be a Christmas miracle.
Kenny cutie, fill my stockings with the respects and checks of your funds investors. Kenny cutie, so hurry to your jail cell tonight. Come and trim your foolish hedge with some freshly printed money from the Fed.
Thanks, Jay Powell.
I really don't believe in you. Let's see how long until you're pegged.
Pegging.
Kenny baby, forgot to mention one little thing. A ring from your favorite lady. Kenny baby, margin is calling tonight.
At least I sure fucking hope so.
Margin is calling tonight.
Hopefully sometime soon.
Margin is calling tonight. Or sometime in the very near future. Hashtag not a cold.
Merry Christmas, everybody, and Happy New Year. It's me. And the holidays, the other holidays. It does slap, Nutsaculon. You're not wrong. I saw your high-protein breakfast. Thank you. This is the cutest you've ever been. It's not inaccurate. I hope everyone had a good holiday. Because tomorrow we get to ruin all of that with the markets being open again. Thanks to this very special episode of Pickle Financial. You know, one day when we're all rich, people will look back and be like, look how these fucking people behaved. Are we about to get a little hopium for the holidays? No. I still might write a DD today. I'm seeing how I feel. 167.50 safe this week? I really don't know. Thank you, Ecstasy. Newest member of the mod team. Your DDs cause FOMO. Wait for the right moment to strike. See, that's not. Gary Gensler wouldn't like to hear that, I don't think. Thanks, Smuxfox. This is the most lewd Christmas hat I own. I'm not saying I own a lot of Christmas hats, but this one's definitely the most inappropriate. You think there'll be a minor run this week? It's possible, yeah. How was my Christmas? Did I get anything good? I got a pizza oven that I can't use in my apartment. And that's about it. I hope you had a good one. Cool hat, bro. Thanks, Brad Stunk. Sideways and down to 130 before Moas? Possibly. Let's do some historical research. I've done no research this weekend, so anything we do now is it's gonna be the first time I'm doing it. See, we didn't run till right there last year. Not hard, but the ETFs were low. Huh. DD teaser. Oh, I think we might be in the middle of a short squeeze, but I'm not sure. Santa bought me an air fryer. I sacrificed it off a steep cliff in your honor. Thank you so much. That means a lot, Dan. Dan for hire. Well, I'm trying to determine the effect of Ryan Cohen's buy-in on last year's gamma exposure. So I think Ryan Cohen's buy-in might have been what triggered it, right? And so if you take like the period up to there, and then you take the period immediately following it, I think it kind of looks more like what we're looking at now. Like, so if I just eliminate the pressure from his buy-in, hold on. What do you expect it to behave so similar just because the ETF exposure windows? I mean, I expect us to go down similarly. My husband thinks you're secretly a Floridian. Oh, that's fucking going too far, Hales. All right. Way too far. I will not be told by a paramedic that I'm a Floridian. Based on what we have seen over the last month, they've been trying hard to break up patterns. As such, I don't think we can bank on historical movement except for actual exposure and settlement ranges. I agree. My goal with analyzing this was, did they try to short through the ETFs in a similar fashion last year? And was Ryan Cohen's buy-in the reason that we even saw any expected movement here on December 22nd. And it does kind of line up. I mean, not great, but it scales. Now the question is, this year they burned ETFs, right? Last year they burned GameStop. GameStop went on the reg show threshold list right around here. This year ETFs did. So the question is, I guess, will the effect be the same? Because I don't really think they ever covered. If they've covered anything, they haven't covered much, and they're still kind of stuck in the same cycle. And so their response to the same things is similar, right? Like last year, large delta sensitivity spike here. They shorted the shit out of GameStop, put GameStop on reg show. This year, since they're avoiding the lending pool, large delta sensitivity spike, and they burned a bunch of ETFs. But those ETFs maybe do an equivalent amount of GameStop that they shorted last year, right? So I don't think Ryan's Cohen buy-in really affects. I guess I was trying to determine if it affects the rest of the cycle. I don't think so. I think all it really affected was that December 22nd run up, right? Because they tried to slam the price with borrowing GameStop last year, and then Ryan Cohen bought in, which led to exposure to that delta spike, that delta sensitivity spike, which drove the price up. Because we had the exact same delta sensitivity spike last year. It was actually less. But I think they avoid those delta sensitivity spikes in the same way every time. One concern I have is that we are selling. Selling one, exercising one contract, and they're deep in the money. We might actually let them off the hook a little if they're hedging at 80% of what they should. If we're selling one, exercising one, it doesn't matter. It's the acquiring of exercised shares that puts pressure on them. They cannot do this. They cannot acquire through bona fide market making. That's why exercise is important. They have to create fails elsewhere. So bullish, bearish, indifferent. Indifferent. I do wonder if the ETF managers will demand satisfaction in the next couple days, like in the next T+2. We have an FTD day here, so we could see some price action on December 27th. But unless the ETF managers demand, those shares be returned or do a call, like a recall, which I'm not sure, because like the ETFs didn't go on reg show last year, just this year. I demand satisfaction. It's kind of up in the air for the rest of that T+6 window. If we don't see any price action, they're going to fail out those 35 calendar days. I had a very funny Christmas with family. Can you give me some hopium that this is still on? Even if not in January, just in general. I mean, nothing's changed. And ultimately, everybody is still part of a very valuable long-term investment, right? So why would you care, right? You know, people who bought Apple at $5 were called idiots, morons. It was a failing company. Steve Jobs was a con man. You know, it's all been said and done before a million times. If I had $1 for every time somebody told me I was too late to a play, you know, I'd have enough dollars to make more plays. I don't know, but yeah, from a value analysis, GameStop's fine. It's a good investment. It should see growth in the next 2 to 3 years. Sure, you might have to hold it if nothing happens, but I don't think that's the case. But that's sufficient, right? Just to be, and it's like, you know, you're an investor. You're invested in a thing. I don't know how somebody can FUD you out of that. Can you write a book of analogies? Have you looked into the June dates where Reg Show was on XRT was on Reg Show threshold this year? 24th, 25th, 28th. June? That could have been due to the rebalancing though. That may not have been for the same reason. 24th, you said? June 24th. Was right around the same time. That's interesting. Same period of the cycle. Let me see something. Where's my little measurement tool? There we go. Oh, no, I don't want that. It's the wrong tool. 24th? 9 and 35. Huh. That's bullish. I don't hate where that lines up. What do you think of the FUD talked to the egghead guy saying after brokers being vaporized due to MOAS and DTCC, with the insurers need months to settle and maybe not being able to fulfill orders? It's possible. I don't think so. Are you talking about that fucking guy who's always trying to Metzler or whatever his name is? I don't trust that dude. You seem more pessimistic versus last week. Do you believe they will find a way out of their obligations? No, I don't think they have a way out of their obligations. Tammy. Our options interest, like our current OI is about half of what it was last January. I'm not really concerned about the options coming in. I think they'll pick up. Thank you, Jen will travel the world. Pesto Mystic. Yeah, execs leaving Fangs to join GameStop is, I mean, it's still just a solid play. And I think the window for return and growth is fine. I guess a value investor would point to their 10Q and, you know, say this doesn't look good for the short term and that, you know, GameStop has lower to go. But I think that like the short positions on it will prevent that from happening. Do you expect a sentimental January rally? I expect sentiment to add to a rally that's already probably going to occur. Suppose nothing happened next week. Do you still expect price movement around 110? Do you think there will be more suppression to keep the price under 200? That's possible. I think they could fight for that. I think the current delta sensitivity showing that like 200's kind of the cap, unless we get some volume to push through or FOMO. Yeah, from a technical aspect, it looks like we're due for a bounce to continue. Have you seen any evidence that ETF fund owners, in an effort to fill their fiduciary duty and actively combat dilution, seems like they just roll with it and don't care? I mean, the investors care. ETF investors do not want to be on the reg show threshold list because it shows that there's illicit activity going on inside their investment, which looks good, you know, especially if they are funds themselves. That looks bad to their investors, right? There's a chain of liability there, and so yeah, they would probably attempt to nip it in the bud. I don't know if fund managers are actually going to do anything about it, but they'll still have fails, and those fails will have to be satisfied. Where would T plus 935 line up from this reg show listing? So those occurred on the 17th. And I believe we had I think it was out here. Oh wait, that's February 3rd. Which is already one of our expected ETF FTD dates, actually. Have you seen evidence that ETF 1231 160? I think I roll Monday if we don't see T plus 2 exposure. NFA. Yeah, same. 28th at market close. I'm rolling forward all my Januaries. So if I don't see, God damn it, that's so annoying. If I don't see a fairly significant amount of movement, enough in order to like roll it some profit in the next couple days, I don't expect GME FTDs to be very high right now. I think we may start to see some more borrowing as we move for the next couple weeks, because they have pulled so much out of the ETFs already that they may actually start borrowing real shares of GameStop, which would be awesome. That would be a great indicator. If we start to see the borrow rate climb, that's going to be very telling about future price movement into the rest of this cycle. Might XRT calls be a smarter play than GME calls? They might be. They might be more profitable. But we'll see. See, the problem with that is that like the NAV on the fund, like if all those baskets were weighted to GameStop, right? Like if they borrowed the basket, returned everything but GameStop, and then sold the GameStop shares, right? Then that fund is due just GameStop, which is relatively low weight. So like the XRT may not run as much as GameStop does, due to those FTDs. Are you staying on until market open? Fuck no. So I'm trying to understand the delta sensitivity info. Does that mean we may not go above 200 in January? No, in the near term, first of all. Like this coming week, it's very unlikely that we would cross 200. But that's not all the way out, right? Like that's not out to January 10th. That's just until let's see. That'll be like the 31st. So, I mean, and historically, these dips, these drops, improve delta sensitivity, right? Because options become cheaper, and people buy more calls. Are you streaming earnings tomorrow? Sure. Yeah, don't. It's not that we're not going above 200 in January. That's just. I mean, even if you scale the price action down to where we're at now, right? Like if I were to take last year's and try to remove the effects of Cohen's buy-in, I guess. You know, we still go up like a lot. Like even if I try to just like flatten down all of the previous price action, our price improvement is still astronomical. Gonna bring that down to here. I think that scaled it out pretty sufficiently. So like these price improvements over these FTD dates are fairly drastic. It's hard to say. We don't know. We don't know the extent of fails until 15 days after they occur. So for December 27th, we won't know the fails on GameStop until January 15th. How was the eggplant parm? Phenomenal. I'm going to have some more after the stream. They have a fuck ton of capital to fight the rising tide. But their ammo is not infinite because all of this requires share creation or shares. Like there's no way to avoid that, right? Like you can't create shares for free. It costs money, and the more shares they have to create, the more it costs. It's almost like our own version of Max Payne, in that the fewer shares they have available to them, the more pain they suffer. You and the quad team made a what if scenario on the possibility that short hedge funds can avoid ETF FTD settlement date, or is there no way for them to escape judgment day? We have attempted to figure out ways for them to dodge the FTDs. It's difficult. A lot of these ETFs are very low trade volume. So their turnover's low, which means that satisfying FTDs through CNS is difficult because there's no volume, right? There's no volume to net out those sales. And the same goes with GameStop now. Last year it was far easier for them to net FTDs through CNS because we had so much volume. It was very easy for them to internalize until they could find a buy order to pair with. If we think they're using ETFs to suppress the price, shouldn't price action shift T plus 6 days in January? Possibly. And that would be the next couple days. That'll be tomorrow or Tuesday will be the T plus 6 window. Technically, they have T plus 9, right? They have T plus 3 before a fail occurs. But then they have T plus 6 to locate. Then they have 35 days. How do we know retail isn't selling? We don't. We have like long-term VWAP that indicates that retail is at least even between selling and buying. I feel like over the last 2 weeks we have seen some retail selling, but it's been minimal. Like if we take a look at our weighted VWAP, give me a second here. So yeah, the last couple weeks after November, I think we've seen a small amount of retail selling. Very little though. But you know, anytime we have these big long periods, we've seen that. We've seen like a small number of retail sell off. We saw it back here in like August, after the big August run, or right before the big August run. We saw a little bit of it occur back here in like April into May. It's just like FUD and low prices. I think most of those people eventually buy back in before the next run. So the net effect is minimal. But I mean, there's a reason they spend that much money dropping the price, and it's not because it doesn't work. Can you point to a good document that outlines the processes and fees involved in share creation using ETFs? I have a couple links in the book of MOAS DD that are probably worth checking out. If you were starting over and had like 50K to start investing, where would you put your effort to learn the market? Day, swing, options, value, other? It's a good question. The first thing I would do is paper trade. The second thing I would do is learn value investing first, and then find a place where I felt comfortable storing my money until I'd learned more speculative forms of investing. Because I spent a lot of time holding on to capital while I paper traded, and that probably didn't do me a lot of good, right? Like that 3 years, like I could have invested in a lot of things and seen very decent, steady growth while I was learning, learning to trade. Maybe a few of those goofs that are selling to rebuy in CS as well. That too. I wouldn't be surprised. I think BlackRock actually has like a video on ETF share creation. That's like about a flower market. That's a very good like explanation of the process. It doesn't tell you how they, do other things with that process, but it explains the process very well. So put money into GME while learning, for example. GME is a very, like, while I think it's a good value investment, from a traditional standpoint, it's not. I think GME is what you would consider, like a burnt cigar, I think is the term for it. It's like a company that's doing fine and is like undervalued based on the amount of money it has coming in, but the market sentiment towards it, or like it's doing fine based on the money it has coming in. It's like not going anywhere. It's stable, but the market is pricing it at a much lower. That was true before when DFV bought into it. Now, I would say GameStop is more fairly priced from a value investment standpoint, at least until they make some profitable quarters and some forward-leading statements. So no, I would not say GameStop as like, oh, I mean, you could, like, obviously we all believe in GameStop, right? But from like a pure academic assessment of GameStop, no. Companies like Tesla would probably be better, although I think Tesla's overvalued. But they're forward leading, like their potential is very high, and that's a lot of what Tesla's valued on. Thoughts on SPY for the upcoming week? It's a good question. Still up, I think. Saw a little bit of a dip into close, but it hit its 52 week high of 472.19. We don't have any SLD coming up. There's no reason for it not to keep climbing. I think it's sufficiently broken out of that high resistance. The trend is like the correction has now corrected back to the upside. We're going to want to see it break through this low, 472.81. Once it crosses 472.81, if it continues up, I would expect the next test to be around 485. So 1 month, I would say that from the bottom of the SLD correction right now, and this is something I've been doing on the side, but from the bottom of these SLD corrections, SPY calls at like half value 1 month out, so like half of the potential range, have been very, very profitable. This is also true on if this breaks out, right? This has failed to break out, but it also hasn't tested this early in the SLD cycle. Like the rest of the times it's tested this range, it failed, and the SLD cycle began late in November. And so now it's starting to test far earlier in the cycle. So we have like 3 weeks until the next SLD date. And so it's got lots of time to start regaining some actual ground. Oh, sorry. That's my bad. There we go. All right. So the last few tests of this high range have been coming right before the SLD cycle. Here it was in November. It was deferred in November, don't forget. And December. And then, now we're only 3 days out. And we're already testing that high. So I expect it will push higher this time and start to regain some of its original channel. And then, the SLD cycle can begin probably down to there in about a month. But we'll see how it plays out. It's something I've been doing is like just buying the dip sort of, and just buying calls like about a month out. So the next SLD date, calls for that date. And then it had like half this range. So along this like EMA 30. Because it keeps crossing back to the upside. It's similar to what's happening with Cat, where Cat keeps bouncing in that channel. But the range of that bounce is high, right? Like Cat goes from like 190 to 205, right? So it's a $15 range on the channel. The SPY is even wider. So I think I might be able to capitalize better on this even than I am on Cat. Can you cover that SPY play a bit more in Pickle's picks? I mean, it's a little late to get in on it now. Like now you're playing a breakout play, right? Which I can cover in Pickle's picks. But the SLD play, like that window's missed. So I bought 465s here. For I believe it was Jan 21. And so those are up. And I'm going to hold them and see how high they go up with the intention of selling them slightly before this week. Because this will be the next SLD week, right? And I think I told everybody about that play on this dip. Like this SLD dip. I think I mentioned it in Pickle's picks that week that I was gonna buy like 465s. Because they're super fucking cheap, but they go in like in the money, right? Jimmy's lowest MACD crossover ever is going to happen soon. Does this mean something? Yeah, it means that the price has fallen far below the moving average on the daily. That's all. Oscillators tell you the same thing everything else does. They just look prettier. If you have Feb calls now, are you thinking about keeping them still or sell them and buy back later after Jan 10th? I mean, technically the correct play is to sell them and then buy back later. Like after, at the same time I sell the Januaries. The issue I have with that is it's a pain in the ass to do, and I'm only going to lose a minimal amount of, like, most of the money you guys have lost in your February contracts and I've lost in mine is just due to the price dropping. It has very little to do with the theta, right? Because the price has continued down and down and down and down, and so you've lost intrinsic value out of your contracts, but the theta decay is really not that great, right? And so I don't expect the price to get much lower than we're trading at now. It's possible, but probably not significantly. Even if it does, on a price rebound, those options have higher vega, right? So they're more sensitive to that price movement. And because they're farther out, they're more sensitive to that price movement. And so the value of those contracts will jump right back up again, right? Like we had that little run the other day, and like everyone's Febs, a lot of people's Febs, not everyone's, but a lot of people's Febs went profitable just on that, like, I think it was like an $8 run or something. So like they're still very sensitive to price movements in the underlying. So like I know everyone like feels like shit right now because we're trading at like 150, right? But you know, if we move to 200, those options will become very profitable because they were all bought below 200 for the most part. There were some that were bought, you know, on the peaks in November, which is unfortunate, but hopefully those have been averaged down by now and those people are in a lot better position. But if you were buying fucking February calls at 130 and we moved to 200, like those are going to be worth quite a lot of money. I didn't make the BlackRock employee video. Would Apple or AMD be considered a value investment, or have they had too much price improvement lately? I don't think AMD is overvalued at all. I think AMD has quite a bit to go. I think AMD should probably be valued similarly to NVIDIA. if not higher, in the near term. So I think AMD has a lot of room to run. I think my like 1 year projected price target for AMD is about 200. So I have leaps right now at 125 and 135 that I bought back here. If I was buying here, I'd be buying leaps at like 150. I have a lot of them, but I've been invested in AMD for a really long time. I know the company pretty well. Their commercial like server uh, profits are way up, and those I think those are only going to continue to grow. And if they could even reach a half of what Intel had at its peak, um, this company will be worth a fortune. Also, Lisa Su has built over the last 5 years has built a company that promises and delivers time after time after time. So investor trust in AMD is building significantly. I would not rely on your initial foray, Luna, into trading to be your primary source of income. Um, I understand the need, and you don't want to be trading with the mindset that you need to make money every week. Some weeks will just be losers. Sometimes you have a month of losers, and when if that's your income, if that's like the money you need to live off of, that can really damage not only like the trades you choose to do as you attempt to take on more and more risk in order to capture profits, but it can burn you out a lot faster. Burnout's very real in trading and shitty. Luckily, my years of grinding competitive video games have made me impervious to it, but that's not true for most people. Lois Maxi crossover. Happy holidays, Windmill Willie. Miss anything significant? I don't think so. I mean, nothing's really changed about the situation we're in. I still think we might be in a short squeeze because the desperation's getting a bit stinky, but it's speculative. More like a hmm, trying to think of the terminology I want to use. Thanks, Trina. It's a great hat. His antlers get jacked. When would we be able to confirm the squeeze hunch? I'd imagine when we started short squeezing. A lot of things are lining up. Our most recent short attack, institutional interest in GameStop picking up. This desperate bid to dodge delta sensitivity is very telling. This is what happened in the VW squeeze. They tried to bring the price of the stock down enough. I think they may have done it in order to get Porsche to sell out of their options. Porsche didn't. Rip. Later, JC. When you miss me, put Guybrush on the stream to feel better. Have a great few days and see you from OS. All right, I'll see you soon, JC. The last time we had a low cross on the MACD, that was the first time we had a spike that was below 300. Yeah. That was August. Thanks, Dominic. What's the IV look like for AMD right now? I have Jan 2023 calls, 35 at 35 a share, and I'm considering rolling into a lower strike. How is the IV on AMD? You should really calculate these yourself. Brokerage just lie. Especially if you're buying leaps. Let's see. So you have Jan 2023 at 30 a share. So you're at like, what's your strike? 140? You gotta tell me your strike. $35 a share. So are you already in the money? Yeah, no problem, Luna. I've just seen so many people try to like force it, and it's not worked out well for them. I did see the moon tweet by Lambo. July 15 calls on SoFi. Seems like it's holding this resistance, but I want to get your thoughts. Long-term play for sure, but it seems like a safe play to balance my GMA. SoFi is risky. SoFi's got a shitload of short interest. And a fairly large float. At a time when banking may not be doing so great in the near term. If you just got in, like, I feel like you're probably fine to see some growth. I don't know if I'd trust the growth. That's like the thing on this. Like, I think it's very likely that it will realize some value and then get shorted back down. So be aware of that. Be aware that, like, no large financial institution really wants SoFi to succeed. They present a pretty large threat to the larger investment banks, and so the short interest is very high. So just remember, any like expected price movements could be suppressed. Any runs or price improvements could be slammed right back down again, as we've seen happen multiple times already. So don't be afraid to take profits on those when they are, you know, valuable. It does look like SoFi's turning around a bit right now, but it takes a while to confirm it. Should I create an RAMC meltdown to capitalize on core followers? Allegedly, SoFi doesn't offer cash accounts, only margin. Read that. Read that on SS. Haven't confirmed. There's negative sentiment if true. That might be true. I don't know. I've never invested with them. Most investment accounts are margin. Like using cash accounts is odd. I wouldn't say take profits quickly. I mean, you have time to realize profits. Just don't be afraid of taking profits. Like, don't be like, oh, it's hit 23, it's going to go to 40, you know. Be measured in your approach of taking profits on this. If you have a lot of calls, you know, feel free to like peel some off, you know, and let some ride. Give me a quick opinion on Cube and CMO. That's two tickers. Cube Smart. Storage should go up. People are still getting evicted. This company's terribly run. Probably a little overvalued. I think too much. Like the problem, I think the problem you're gonna have with storage companies is a little too much institutional interest in storage facilities. And then what was the other one? SEMO. The fuck do these guys do? Silicon Motion Tech. Negative and NAND flash controllers for solid state drives. Interesting. I think you might have missed the boat on this. I mean, this is like just breakout after breakout after breakout, but you never know when the last one's gonna be, right? Like this is its all-time high, I'm assuming. Yeah. You just have no idea how far this is gonna run. It doesn't look like it does a large amount of volume. You'd want to be in and on it for a very long time. I would say that's more of like a long-term investment. Friends on Discord want to know what your plans. Feb to greater than 200. I should sell out of them. I'm not going to, but I should. I'll probably just average them down. Like my 350s. I don't have any 510s, which is I know what you're asking about. If I had 510s, I probably wouldn't own them. But my 300s, 250s, 350s, like I should sell these and buy back in. But the theta decay on these is, I mean, the theta decay on these, because they're so far out of the money, is greater. On 510s, it's much greater, right? The further out of the money you are, the faster the rate of theta decay. And so it may matter to save those like 10 days, right? I mean, I don't know. I feel like SEMA might be due for a pullback at this point, or overdue for a pullback. Either that or it was wildly undervalued to begin with. Do you see it taking a while for GME to get to the 190 210 level again, or is it imminent in the next couple of weeks? I think it's pretty likely that we're going to see price improvement over the month of January. I don't think 210 or 190 is like a relevant, like that relevant of a resistance. I think the potential goes far higher. And the illiquidity hasn't changed. You know, it doesn't take a lot of volume for us to move up $50. I'll be selling my January 950s at the end of the 28th if nothing's happened. Did the Delta judge change your mind? No. I think they did it last year too. Because like when the Delta sensitivity spiked last year, we also didn't run, right? We ran a little bit because of Cohen's buy-in, but not a lot. So I think this is pretty standard end of like Q4 behavior for them. And I expect the FTVs to have the same effect. I really was asking for a friend and not about 510s. Oh. Can you remind everyone that the greatest trading documentary ever is on Prime right now with Billy Ray Valentine, Lewis Winthrop III, and activist Reddit investor with great rack, Ophelia? What? Merry Christmas, Jake Armada. Do you think these have a chance to recover? If we see price improvement, you bought them before earnings. So we're trading out right then. I mean, we were low. You see bottom when we were around 180. Yeah, I think that those, I mean, they might have a chance if we run in the next few days. If not, I would just ditch him. What's your thought on volatility plays? Currently looking at VXX and UVXY for Jan or Feb. I have a VXX and a UVXY position, but it's in the money and it's in like they're further out. I think my VXX ones are in June, and they are at $15. And then I think my VXX are June and $18. And then my UVXY are $15, I believe. And those are for March. Yes. So I've bought them in the money and pretty far out. But those are just a hedge, right? Like, I have to hedge something against inflation. As far as playing the VIX, I'm not a big fan. Well, if we run tomorrow, that's debatable. We don't look good for a run tomorrow. Right now. But from a technical standpoint, we might bounce, I guess. We have a trend that we can bounce off of. If we've reversed. But I don't know if we're going to see ETF FTDs get covered in the next couple days. I'm just worried that you'll end the stream on us sooner than you should. Nope. I said, as long as you guys hold, I do too. I wasn't lying. Don't some funds accept cash in lieu of shares when returning creation units? That can happen. But no, not to a degree that matters. There are some that can be. I think like synthetic ETFs can be cash settled, but the rate of borrowing from those is minimal. That's right. They have synthetic ETFs. Can you take a look at match stock? I think stocks like Tinder can rise with lockdown starting again. I mean, I feel like there's better plays, but sure. Double bottom looks good. I'd want to see it break 136 to the upside before it really realized any value. But there's things like Peloton that's still like way under that could bounce back, or T-Doc. Like these are both much lower and have better range and potential than Match.com does, I think. Moderna looks like garbage. I think Moderna is going to fall back down to either 223 or 200. Ooh, Saks has a nice bounce. I might be getting some Saks calls this week. I just hope Caterpillar keeps doing this. Yeah, it's the SLD begins on the third Monday of each month, and we usually see those deposits returned the following Monday. So January it'll be the 24th, 17th through the 24th. Probably already answered, but I'm assuming you're holding your Feb calls 200 and below since there wasn't much upward movement for gains. Yeah, I'm probably gonna hold all of my Feb calls and just sell the Januaries. Most of my Febs were bought pretty cheap, so I'm not hurting too bad, but and the potential's still there. I bought a lot of them on that dip down to like 140. I didn't hit exactly the bottom, but pretty close. As a poor who's impatient, thoughts on buying sub 300 call and trying to save up for Q second contract later. Should I wait and buy two at the same time, closer to runs? So like how far sub 300? Pickle Morty, are you betraying the 510 gang and thinking about buying near the money calls? That's what I was thinking. It's VIX hedging like that is a strategy. It's like a common hedge strategy against like a cash portfolio. 6'3" Prometheus damn pal. So you buy in the money, you buy far out, you sell on spikes. A supporter is impatient. I don't really know. Pickle Morty. You're gonna have to make that decision. It's always the same thing. It's always risk. That's the only question that can really be answered when determining like what strikes or dates you should buy or how much leverage. It's just your risk tolerance. Like if for people who are sitting on 180s for Feb right now that are down a lot, their risk is still very low. The odds of the price coming back up and putting those in the money is high. But if you're at 300 for Feb, those are riskier, right? And then obviously the further out of the money you get, the more risk you're carrying. Also, the more theta decay you're eating. So you stop streaming when Citadel fails margin call? I mean, we won't know who failed a margin call when I stop streaming. I stopped streaming when the buy side of the order book or the ask side of the order book is stripped and the price is running. Am I crazy to have early Feb vibes? This moment feels a lot like that. I think it does. Yeah. Did you see the Market Watch article that says UWMC is set up for a short squeeze? I fucking hope so. I have 1,000 shares of that shitty stock. I love that we call 300 near the money at 150. I don't. You do. Pickle Morty is legit asking questions for someone in the Discord 510 gang right now that can't be in the stream. I mean, the problem with the 510 gang is your guys' like delta value on all those fucking contracts is minimal. Like there's some delta value to it, but not a lot. And the risk is high. Like you need a strong voluminous run. I like it, don't get me wrong, but it's super risky. And I'm not even sure what's going on there. Are you guys just like buying like 510s every week until something happens? You're just hoping that like the rest of retail is going to prop up your options. I can't hear you over my Violet upside potential. Oh boy. I don't know what to do with that. Hype makes 510s double often. That's fair. Any interest with QQQ? It's probably solid. Like for like a long-term buy and hold. I don't think big tech is like at huge risk of anything. Like they're stable, they have tons of cash. They have low overhead and high profits. Like in like a 1 or 2 year window, you might see downside, but in like a 5 year window, probably fine. How do markets typically perform in January? It's usually busy. Maybe the 510s were for the spy. We are the float. All right, all right. Don't get me wrong. Like DFV's options were more than 100% out of the money too, but he had time, like a lot of time. And his options were like worthless at certain points. Like by the time we took off and like started to take off in December, his options were worth nothing for April. Spy is interesting. A lot of the puts are getting pushed out. Like a lot of the puts on the spy have been rolled. So I think the spy is going to keep running. I have lots of experience with worthless options. Be the 510 you want to see in the world. Thanks, Mr. M. I appreciate it. Maybe April's. Maybe I would buy some. No. I just buy April 500s and front run you guys. Oh, and I know I'm not posting links from Reddit and stuff because I don't want to like be accused of brigading because that's like a thing right now. But people on Reddit are actively like trying to say that Dillionaires is brigading and report us to Reddit admins and that the Discord is brigading. And feel free to reach out to the moderators and express your opinions on that, because never have I seen a link posted in our Discord or on Dillionaires that specifically says to upvote or downvote something. Not to mention, brigading is not part of Reddit's rules at all. So just remember that like the crazies will speak loudest, and be sure that, I even though I do think some of the mods, you know, don't like us or me, I think a lot of them are indifferent, and I think making sure that your voice is also heard in these times is probably important. Because they're directly attacking the communities that we've built over these last 8 or 9 months. And I said it when I dropped the options DD, is that if there ever was going to be a paid shill, they would be anti-options. And I still don't think I'm wrong. And I know a lot of you have walked away from super stock and stuff, but I think it's important that that message remains and that people know that there's not just one way, that there's alternative ways, and that they're equally or more important. They're more important. Who do you think does the best GME TA? Me? In telling you that there's no doing TA on GameStop. There's no market sentiment controlling the price. It's only movements from institutions. So there's no point in doing TA on it. No, Rocky and Trade Spotting do great TA. It's different than I don't like some of the stuff they use, like fibs. I don't think low volume oscillators are an indication of high volume coming in necessarily. Like volume can just remain low. GameStop's not going to get more liquid. So like trying to use like historical volatility to time spikes, I think is kind of useless. I'm sure they know that by now. If they don't, they'll realize it soon. Not tell them to fuck off, but you know, it is concerning, right? That like this small minority of people is just constantly attacking the same thing, and that like, I mean, like Jared was like specifically brigading posts on my daily last week, like, which there are screenshots of. I think that shows that there's moderators that are not acting in a neutral capacity, which is, you know, bad for the community. And whether we like it or not, like a lot of this continues because of Superstock, and a lot of GME investors are there, and it's important as a point of knowledge, for knowledge to be spread about the stock and for theories to be created. And the current trend, and the thing that, you know, a lot of these naysayers are pushing for defeats that spread of knowledge, or incapacitates it. They want us to go back to Wall Street bets and losing. Yep. 510, 741 times current price plus 69 projected price action by 1269 tomorrow, 173.71. I fucking hope so. That'd be cool. We really do need to break back up above the EMA 250. It's presenting quite a lot of resistance. I guess the problem I have with Rocky and Trade Spotting's current approach is that it's kind of just analyzing day-to-day price action. It doesn't really, which is fine if you're day trading, but it doesn't really like, if there's only one entity controlling the price of the stock, things like Fib, Elliott Wave, those all fall apart. The illiquidity destroys volatility models. It's just, there's no reliability in a lot of that technical analysis, and that's why I stopped after I released the DD, like the Book of Moas DD. That was it, because there was no more technical analysis needed, right? Technical analysis had gotten us as far as it could in helping us figure out why these signals showed and when they did. And then I didn't see any more use for it. I think it's important to know when technical analysis is failing. And I mean, it was obvious before I released the DD, but we were still using it to continue to support the thesis as we ran into August, and we ran into November, through the anomaly period in this window. We had to keep paying attention to the technical indicators, right? Because they were helping support the thesis. But now there's no reason. Like, we have so many proofs of concept at this point that I think it's a foregone conclusion that we no longer need technical analysis. I think that the highlighted dates and the cycle theory will tell us everything we need to know about what actions the short hedge funds are taking at any given time. Like, even outside the... I was very early and strong supporter of Jamie and Rocky. It was a mod on Trade Spotting, but I had to leave because I don't see the point going over daily price action. I want strategy and I want to win. Same. Do you know Dettles, or whatever the name is? Yeah, T. Dettles, Whale Teeth for Moas. I know him well. He called me a narcissist, which was mean. I think he's a member here, or he used to be. Well, no, it's just that, like, the crazies are mailing the moderators like page-long manifestos all day, right? And we're not really interacting with that as a community. And I mean, it's me they're attacking ultimately, but it's also all of you guys and what we've built. They're going after everything, and if we don't stand up and stand our ground, then we lose. And slowly, right? Like, they'll nip away at the foundation of what we've built. Like, when they took away my one daily link to the stream, or like, what was the next thing they took away? Me cross posting my daily. Like, I mean, fucking Reddit has a built-in function for posting your post to Twitter when you post it. So it's kind of horseshit. Oh, Dillard's is like one of the most heavily weighted stocks in XRT. I think this run that we saw into November was their special dividend, but also a massive amount of short interest on the stock. I expect from this low, when XRT FTDs are covered, Dillard's will run again in a very strong way. If we look at like November 3rd on Dillard's, where we had that massive ETF FTD exposure, we saw an astronomical price increase here. I think also Dillard's has a free float of 11 million shares. So its squeeze potential, probably even without regarding ownership or anything like that, is very high. And options are much lower IV. Even like Feb. So I think it's got a lot of potential. Thank you so much, Rumpel. I appreciate that, man. Whale teeth for Moas, bro. It still blows my mind with a large institution or whale hasn't come to send GME to the moon. Any idea why? Systemic risk is a possibility. You don't go and try to kill the king unless you're going to be successful, right? So nobody's going to take the risk of trying to take down Citadel unless they know they're going to win. And because it's a big risk to take, right? And if you end up on the wrong end of that, you yourself could be destroyed. We need more crazies here. Yeah, I don't think I do too good of a job attracting those into the community. I attract a lot against the community. It could, yeah. Dillard's could potentially catalyze more interest in GameStop. I don't think that's false. The IV is high though, but the potential is high as well. Well, you know what Dillard's has succeeded in is building out their e-commerce platform, which I think is something also that wasn't, expected. But if we look at their May run, it was significant. Very similar to GameStop's, right? All the way up into GameStop earnings where it fell off. This is how we know that GameStop earnings isn't what caused the drop in price, right? It was the failure. It was the roll of the future contract. Is because we see it across the whole basket. It's not just GameStop. And, again here in, we got August 24th, like this run up into August 24th. It's slower and more metered here than it is on GameStop, but, the ETF correlations, so this is the gamma exposures, not a lot here, right? But with the ETF FTDs, Dillard's runs hard. And so I think this is a good hedge against GameStop possibly not running hard from ETF FTDs. Is that Dillard's will. Dillard's fairly small market cap though. Smaller than GameStop's, just far fewer shares. Yahoo says float of 2.6 million. No, the float's 11.25. I think. I don't think it's 2.6. I think they had a split, but I'm not sure. They must have, because there's a second options chain. TDS1. I think these may have been contracts that existed previous to the split, as they are way more expensive. Or post? Did they do a share buyback? I don't know. I'll have to look into it. There's a lot more research I need to do here, and I just haven't had time to fuck with it. TDS1, $250 or $77. And DDS 250, $16. Yeah, there must have been a split, like 4-for-1 or something. Yeah, no weeklies on Dillard's. How did people learn about Dillard's in the first place as a stock play? I have no idea. I just knew about it from its correlation to GameStop. Dillard's kind of just came up when I was digging into like Nordstrom's or J&W, Macy's. Dillard's seemed like an obvious choice to look at. I think they're kind of regional. Are they owned by Kroger? So Dillard's to 420.69. I don't know. I just think that the potential for ETF FTDs here is very high. It doesn't take a lot of buying to push the price of this stock up. Second chain is for the special dividend. Oh, okay. Like, if there was a stock that was more sensitive to price improvement than GameStop from ETF FTDs, I would say it was Dillard's. Like, GameStop ran $50. Dillard's ran from 232 to, I mean, shit, if you go through the whole cycle, 416, right? And like some of this had to do with the special dividend, but yeah, the potential's still there. Everything's in the Midwest, Pong. Is Dillard a possible run on the 12th or 10th of January? That's what I'm thinking. So if we're in a squeeze, what indicators do you think we'll see over the next few weeks? Increased volatility, probably, as we start to reverse trend and move towards the upside. I think we'll start to see those FTD days get more and more volatile, potentially with improvement, hopefully with improvement. Where are DDS at the money options going for now? At the money, I wouldn't look in January, but Feb, like 2,300 or 32, 35. I don't think this is the right time to buy them. I think Dillard's is going to be kind of flat for the next week or so. Bid ask is wide on them. Yeah, I mean, open interest is low, very low. Even on the leaps, or maybe it's higher on these, on the special dividend ones. No, not much. A lot of the chain was sold off on the last run. Some 330s here with pretty high open interest. Weird fucking implied volatility spreads. Like you can get a 280 at 74% IV, but like 260s have 420% IV. When is the date when the ETF FTDs are due on the 10th, 12th? The ETF FTDs go for like 2 full weeks, right? So we have ETF FTDs running from November 23rd. So you have T+9 from here, and I think they may still be doing them, right? So, but at least T+9 from here. And then out 34 more days from each of those. And so it's like the overlap. So starting there. To there. So all the way out to like Feb 8th. But the overlap is this window here, from... So they'll start coming due on the 26th, and they'll finalize on the 28th. So, so that window for the ETF shorting that occurred through from the 23rd. Oh wait, no, that's 34 bars. My bad. Hold on. That's wrong. Wait, this is the 25th. Hold on. Shit. This is incorrect. Hold on. Wait. There we go. That window. So from January 10th through Feb 8th, we should have ETF FTDs every day. Obviously, with the largest drops coinciding with the largest increases, right? So the days when creation was used the most, like the 13th, the 1st, and the 23rd. My Feb 350 down 70%. Sell some December 29th to get fewer lower strikes. Or hope for late Jan. Thanks. Happy holidays. Katak, my Feb 350s are about down 70% now also. I've averaged them down a little. I averaged them down on the dip here. A little bit. Not a lot, so they might be a little better than 70% down, but it's right in that range. The most ideal play would probably be to sell and buy back, because then maybe if on the buyback, potentially you could save like 10% or so, depending on how stable the price is, as long as IV remains low, or just hold them. Yeah, I mean, they're still going to be equally sensitive to movement in January, right? So they're cheap right now, but that doesn't mean they're going to stay cheap, right? So a lot of these Fed positions that are down, they still have higher Vega. They're still going to be more sensitive to IV improvement. They're going to be sensitive to runs on the stock. So I'm getting rid of my Januaries because my Januaries were for the December play that did not come to fruition. Right. And so I'm going to move that January capital out into February and average down. I have some free capital from my cat play last week, which I'm still holding, but I'll probably sell Monday. And I'll be putting that into averaging down more. Averaging down a lot more. Slide your chair out of the way of the dance. Yeah. $5.10 gang. I love this hat. And it's possible, you know, we still think that it's very likely that a lot of the price action that occurred last year occurred because of this stacking on top of the rest of the FTDs, right? Like this also probably happened last year. So while December didn't play out the way I wanted to, I don't think that defeats the theory in any way or lessens the impact of it. I think Cohen's buy-in served to tie up liquidity, but I think options tied up liquidity far more. I think liquidity is significantly reduced from last year. I mean, last year, on our last 2 trading days of this week, we traded like 50 million volume and we traded like 2 million, you know? So, and our bid ask spread is like 900 to 3,000% wider. Like these are significant differences. And so like even if we don't see the volume expected, right? It takes far less volume for us to see those price improvements now. So everything in relation, right? Like you can't look at last year's price action and be like, "Oh, it had so much volume, options were so much cheaper," because that's horseshit. The stock's more expensive now and way more illiquid. So they now have kicked everything into a single time frame. What's their best play to survive January? I don't know. I don't know if they have one. That's why I think we might be in a squeeze, because I think they may be tapped out. Once they start burning ETFs, like it doesn't look good for them. There's the SEC lending pool for GameStop, but how many shares could that possibly provide? And then they start to jump the borrow rate again. I mean, and then they're going to start reporting short interest on GameStop, like, and that's just going to cause FOMO. Institutional investors are going to see that borrow rate go up and they're going to buy in, like, without a doubt. So, you know, in the short term, they're avoiding becoming beholden to the lenders, and, you know, they're dodging DRS and all of that. But I don't know if they can do that and survive this like massive influx of FTDs. And FTD squeezes start every short squeeze. It's always an FTD pileup, and so this is an FTD pileup. This is the point in the year where there were more FTDs than the rest of the year. I don't know how they dodge it. Eventually the variables just become too many for me to analyze, right? And that's especially true through this period. I'll attempt to, but there's 106 ETFs that contain GameStop. Well, the borrow rates on all of the ones containing GameStop have gone up significantly. Which, you know, we had here. One sec. I think I had an image of that. Where are the polls? What the fuck did I do with it? Maybe I didn't. I think I posted it on stream the other day. I can't find it right now. But the borrow rates on all of the GME containing ETFs, even the ones that have larger pools, have gone up significantly. Like the Vanguard Total Market, all of them have had massive numbers of shares borrowed for several weeks now. So hear me out. If MOAS and the price gets to 100,000, wouldn't you just love to have the right to 100 shares for 51,000? Sounds like a steal, no? Hugs. I mean, yeah, sure. But can't I just buy those when we hit 300? Don't get me wrong, getting them now for like $300 a pop is probably a sweet deal, but I could buy Jan 2023 950s, probably not that much more of a premium. How much are those? Is this GameStop? This is Dillard's. That's the problem. Hold on. There's fucking just no reason this strike should be open. Yeah, these are like 1100. Like, why wouldn't I just buy these? Yeah, or I can just buy weeklies. I think they thought retail interest would be gone by now. And if the forward contracts are on a 6-month cycle, semi-annual, then this is the next point at which those failures matter, right? So a lot of forward contracts are semi-annual, which may be like why DFE disappeared after June. Right? Because nothing to do but snooze until the new year. I don't know how much he knew. I know he'd spoken in the past about not being super versed in the market mechanics behind short squeezes, but it's possible that he had, there were other indicators that he was looking at the time that may have been more obvious back then because he was following the price action for so long. What do you think about buying a spread of 28 Jan calls for the 10? Yeah. You could. I don't love it. I'd rather just buy Febs. I don't want to see the effect that the ETF FTDs have directly on GameStop on the 10th first. I mean, we only have November 3rd really showing, like, so after June and the ETF rebalance, right? This is when all the ETFs GameStop was in got rebalanced. We saw a shift from GME FTDs to ETF FTDs. And I'm sure that at the same time that we saw them go from short to long on AMC, right? So, I mean, they definitely took advantage of this to stop borrowing shares on... Oh, wait, hold on. Sorry. They definitely took advantage of this to stop borrowing shares on GameStop. We've still seen price improvement, but at a much lower scale compared to the previous runs. GME was very, very heavily weighted in IWM. Not so heavily weighted now, right? Stocks like Apple are in basically every ETF. That might be why we see Apple running so hard lately. What am I wearing? I have a reindeer hat with like like little antlers that go erect. This move from GME FTD to ETF FTDs is suicidal, don't you think? No, it could be beneficial, right? They spread out the. I mean, it may have always, like I said, it's probably always been ETFs, right? It probably was, it was like Citadel and Susquehanna and Point 72 and all those big players that bailed out Robinhood and Melvin. Like, I think their play has always been the ETFs. I don't really think their play has ever been specific to GameStop. I think their play was short retail, North American retail. Because of COVID, and with Omicron, they're right again, right? Like if we get lockdowns again, we're going to see a drop in these prices, and they're going to profit. Do you think in March I'll be able to afford a pygmy fainting goat? I don't know. What was the moment like when that clicked and it clicked what DFV was saying? That day that I tweeted him and Ryan Cohen, where I added them with that like stupid fucking I think, hold on, I have to look at my tweet history, but it's on there. It was like back when I was doing my cryptic tweet thing. Where is it? I'm gonna find the tweet. Goddamn son of a bitch. Where is it? I don't remember. Ah. I'll have to find it. Who was that guy who was analyzing all my cryptic tweets? Popcorn trader just laying in a field surrounded by fainting goats. I have many Feb calls, and by many I mean like 8 to 10. That's a solid number. That's 800 to 1,000 shares potentially, right? I want to stop buying them because like I should be making profits off of cat. Like if I just taken my cat earnings over the last 4 months, I could like buy a condo or something and rent it and have stable income instead of chucking all of my cat earnings into GameStop calls. Thank you, Popcorn Trader. Do you think there's a DD that needed that discusses all of the heel dragging techniques DTCC lawyers can do to slow down MOAS, covering and the legacy media narratives thereof? DTCC will heel drag. That's not necessarily true. There's no indication of that in the past. When Archegos went down, they pretty much started covering immediately. They knew about the problem in advance, but as soon as the buy-ins were being forced, they were bought in, or sold off. In the case of like Viacom and stuff. So I mean, there's no DD to be done there. If they heel drag, you're fucked. But if they heel drag, it's because MOAS has started. So, you know, you still own shares, don't you? By Jan 2023s, if you're afraid of that. The DTCC has no power to delist an asset. So, who cares about their heel dragging? I don't think the NYSE gives a fuck about them. I mean, like, I would have increased my shareholding, but I just don't feel like I need to anymore. It's already tough enough to watch the price drop $5. I don't think I need that, like, psychological weight of owning more shares at this point. At least options, I can compartmentalize the losses mentally. Did I miss anything? Probably not, Courtney. Merry Christmas. All I want for Christmas is a Girk DD. Thank you. Every time I see a 10-20K swing in my portfolio from options, I think about what yours must look like, and I get a little stressed for you. It's tough. I mean, you guys basically know my position at this point, but I have like that many shares, right? And so a $5, it's not the bottom of that range, but it's in this range. So like a $5 drop in price is a $50,000 loss, right? Believe me, I've wanted to sell at 350 a couple times, but I haven't. Lots of AMC YouTubers talking about failing brokers, so must sell early. Lou versus Wall Street and a few others. Those guys are all fucking idiots and con men. There's my thoughts, Stefan S. Anybody with actual knowledge on the markets has walked away at this point, and all that's left are con artists. That's a minimum. That's a minimum $50,000 loss on a $5 drop. So when the stock drops $100, imagine how I feel. But if I thought it wasn't going back up, I would have sold, right? It's Jimmy dark pools that cause price runs. Just ask Mathcore, he will confirm. And me. Yeah, but that's because for me, it's more like I wouldn't honestly probably do this if I didn't want to be right. like for me, it's about winning, which I don't think most people with market knowledge care about. Like they'd rather just keep to themselves and make money. But for me, it's about being right and winning, like in a competitive sense. Joe Valente, thank you so much. I mean, like all you have to do is spend like 5 minutes in one of those like AMC Twitter chats to see just how far off they are. Like you guys all have enough knowledge at this point, I think, to like suss out when people are just lying to you on the internet, which is more common than you'd probably want to believe. You mean you don't do this for the love of hugs? Say it isn't so. You know what? I would. Someone reached out to me the other day, and like they'd made okay money, like decent money on the cat play. He took a burn in November and made some money on the cat play, and like his family had Christmas this year because he learned to trade options over the last 9 months. And he's not a member or anything. He just followed the play, like heard me talking about it, got in on that dip and sold out at like 206. And because of that, like his family had a Christmas this year that they otherwise wouldn't have had. And like that was never something I intended when I started this. And I hope I'm obviously I'm not gonna say his name or anything like that. But that's so fucking cool that like that like what I do here could facilitate that for someone. Like that means more to me than Moas. I know that sounds crazy, but it does. You know they're lying when they start and end their statement with "Trust me, bro." You've changed my life. I call my wife Gherkin and Pi Fi when we, are intimate and such. I mean, I just want tendies too, but it's cool. Your cat plays are gonna buy me a bunch more Feb April GME DDS calls. Why would I cry? I'm not Matt Kors. Anyway, Matt Kors only cries when YouTube spanks his bank account. I know you are Matt. I know you are a popcorn trader, and think about how unsuccessful your channel would be if you didn't watch my stream at the end of every day to learn more. Girk's solitary tear is the catalyst. Matt Kors still hasn't revealed how much he's made from the pores after he said he would. I mean, if I just take my money that I make off YouTube and extrapolate it to his number of subscribers and daily viewers, he's probably made somewhere above $1 million, like a couple $1,000,000. At least. That and like television appearances and shit like that too. You have receipts. uh I better write him down as a dependent. Wow, this was supposed to be over a while ago. I only meant to do this for like an hour today. That's cool. My thinking is if your channel makes more money than your trades, there's a problem. I kind of agree with that, right? Like, because as you become more wealthy, like if you're becoming more wealthy, you should have more and more successful trades. So like Macor's making millions, his trade should be wildly successful. Like he should just be able to be like he could just be market making with that kind of money. Like you just sit there and fucking sell cash secure puts all day and make millions. But he doesn't because he doesn't know what the fuck he's doing. If you're getting DDS options, would you get the non-standard ones that include $1,500 cash or just the standard ones for ease of sale? I mean, I guess in the event of a run, it doesn't matter. Like if I was just sitting on millions in free capital, I would just market make all day. I'd just sell 45-day to expiry contracts on AMC like nobody's business. I'm super curious how the AMC squeeze plays out. It's got to squeeze at least somewhat, I'm guessing. What's their chain go to? Like furthest out of the money call on their chain. That's where it plays out to. $90? 145. What about this January? No, wait. 145. If a hard run happens all in one day, they'll be capped at the upper limit. That's where Citadel will close their swaps. So the upper limit of the call chain is where AMC squeeze is capped out, I think. Because then all the volatility potential is on downside calls. So they need to drop the price in order to realize the downside volatility. Any other literature worth reading beyond technical analysis of the financial markets? Options is a strategic investment. Securities analysis. Those 3 books are good. I wonder if AMC has a 510 gang. They don't have 510s, Pickle Birdie. But if we're right about AMC being used as a hedge, that would be the limit of their squeeze. Are you and Trash Dan gonna run away together? No, what's he been telling people? Okay, Chicken Tender Daddy. I can't support the illegal downloading of a book that helps improve your financial literacy. Wait, did you catch that? Everyone always asks me why I don't have like referral links for Amazon, and that's why. Because those books are just free. Like, I have something in my eye. Do you think it's best? Says a poor, I sold all of my calls last Wednesday. Okay. Do you think it's best to wait until the first week of Jan to get back into calls? Yes. Will they run it in advance? I have no idea. I hope not. But as a poor, that's not really something you could probably afford to protect yourself against. All right. That's enough of this. I've already gone like 15 minutes over the 1 hour over that I didn't intend to do. Thank you guys for tuning in. Happy holidays. Fully jacked antlers. And all of that. Thank you guys so much. I'll see you bright and early tomorrow morning. Expect some Pickles picks tonight. Expect maybe some DD. Love you all. See ya. Rico! Not an advisor. Frigulon.